Alright traders, I'm back with another video. This one is going to be on moving averages, but it's going to be the moving average cloud. Trading the moving average cloud. It's the same strategy as the moving average that I showed before with the 100 bar and the 200 bar moving average. But this time we're using a cloud, and it's just for more, when you can see things a little clearer, it helps you to trade a little better. So this will show you some things and let you know when to get in the trade and when not to be in the trade. Now what you usually want to do is the zone here where the cloud is, where the color is, the red and the green, is really, you want that to be your no trade zone. So you don't want to trade anything that's inside of that zone. Okay, so now here's how we get into the trade. I'm going to show you what the market continually does. Okay, now here's what happens. We just came from an uptrend. The market was coming from an uptrend really, and now we came up, and now the market's breaking low again. Now here's what you're looking for. You're gonna see this break below the cloud. You're gonna enter on that break of the cloud, and you're gonna have your stop above this cloud here, above the top of the cloud. But what you want to do is put your stop above the close of the first candle really. Okay, even above that candle. That'll keep you really safe. Okay, because sometimes candles, the market reverses and comes back up and tests that 100 bar moving average. Now on this test right here, the way the 100 bar was moving, if you had your stop right here, you may have gotten stopped out because of this candle right here that came up and touched this 100 bar moving average as it was separating and getting higher. So you may have gotten stopped out there, but if you had your stop above this close, or rather above this open here, or above the candle, right up above the candle, you would have been safe. Okay, now you're in the trade right here and you follow the trade's going. There's no reason to mess with your trade. You leave it go. This is hours upon hours for you, letting your trade go, riding it out. Now you get out normally when you have a break of the 100 bar moving average the other direction, which would be right here. Not a break, but a close. So this candle closed, so you would get out right here. But you see all this motion, this rangy motion. And another sign is like when you're getting into the trade, you could see how the moving averages are separating and getting wider. Well, as that trade is coming to a close, you can see how it's getting tighter. Okay, but you'll be out before that, and it's still wide here. But now the thing is, you have to use some common sense and some discretion in your trading. Now when you came down here and you saw this bar here, this long bar going down, a long bearish bar, but then you saw this wick get pushed up by the bulls right here and made this long wick. This lets you know that this is gonna go back up a little bit. But what happened was the trade kind of stayed in a rangy motion in here. So what I would have probably done, I would have got out. Even if I didn't get out here, I think I probably would have got out right here. And if I didn't, you could see this range right here, and then you would want to get out. If you didn't, you still see this long candle here. Now you're going to wait again and get out. Now that's a lot of pips for you to hold on to and not get. That's 157. That bar right there alone is 159 pips. Okay, but it got pushed back up. What? It got pushed back up roughly 62 pips. Okay, so when you saw that, you might want to get out right there. That's a good time to get out. Now getting back in the trade, we could see how the moving averages are coming together, and now it's looking like a little banana coming here. Okay, this is your banana and it's coming now, getting tighter. Now an aggressive trader could get in right here at the break of this 100 bar moving average, and that's the way we trade it normally. But with the cloud, if you want to trade it safely and just be look for good runs and be a conservative trader, what you'll do here is wait for the break and close of the 200 bar moving average, which is on the other side of the cloud. Now if you get in right here, you wait for this close, you got in. Okay, now you're going to put your stop below this Aggressive trader, you want to put your stop a little below the 100 bar moving average, below the cloud. Okay, but also to be safe, you could put it at the low, the next low, the nearest swing low. So that would be right here. Now, how many pips are you risking to be aggressive? You're saying roughly you probably got in right here. That's 66 pips, not bad. Okay, now the trade went on, you broke, so that was a good confirmation sign that yeah, this is a good trade. But then it retraced and went back the other way, then it broke here and closed. If you're nervous, you would have got out of here because it did close, so that's a sign for you to get out. Okay, if you follow the rules, you would have got out right here because this closed below the 100 bar moving average. But now you're looking here, if you got in here, that's 82 pips. I don't think you're going to let it ride all the way back down to zero again. Okay, so you probably would have taken yours and got off the table. Now you see this happen here, you see this close right here. If you got out somewhere in here and then you saw this close here, you may be thinking, hey, this is going to go back down some more. But see, I'd be cautious because of the way the moving averages are coming together. Okay, but if you did get in, now you're going to get stopped out again. Okay, but now you see, here's where we go. The break of this 100 bar moving average, the two moving averages are getting tighter, and now you had this close right here. You want to get in. Your stop loss is going to be, I would put it below here. You know, you could be safer and put it right below the cloud, but I put it below the next swing low, the nearest swing low. So that would be here. Now you get out, you get in the trade, and you ride this trade. Okay, now here's a break of your 100 bar moving average, so you're going to be out of the trade again. Now you come back, you broke again, you're going long, you get back in the trade. You put your stop loss down here. Okay, see this swing low? The swing low is right at the cloud, so you put it a little below that right there. Now you ride this trade up to here. Now it reverses on you. You probably would have taken your pips after you seen this railroad right here with the two candles the same size and another bearish candle closing like that. You might have taken yours and gotten out. Okay, now you could have got back in right here. But see, the thing to look at is see how the moving averages are getting tighter. That's going to let you know maybe a trend change is in line. And sure enough, there is a trend change in line. Okay, so this broke here. You put your stop up here. You get in right here. You put your stop loss up here. And you see it cross over. And now you see them getting wider and getting wider. You ride this all the way down. There's no need for you to get out of this. No need. You stay in there and you get out right there. Okay, that's how you trade that moving average cloud. Now there's other ways to get to play it a little different also. If you don't catch this cloud, if you don't catch this right here and you want to still get in, there's other things that you could do to get back in here. And what I like to do is trade support and resistance. So I'll do this. I'll put a support and resistance line. I see that right there. Okay, I didn't get in here, but now here's this support and resistance line. I'm going to get in right here. I'm going to get in after it breaks this support and resistance line. So it broke that support line, went down, came back, tested it, and kept on going. If you don't get in there, you move that support and resistance line. Here's your next level of support and resistance. You get in here. Your trade goes back, test your support and resistance line. You got your stop loss a little bit above that. It's going to be above the candle, nearest candle. Okay, you didn't get in there. Here's another support and resistance line. You put it even down here at this low right here, but here's where you really support right here. Okay, so that's how you have chances to get back in. For now, that's going to be just about it with the clouds. One last thing I want to show you. This is tough to trade right here. When you see the market doing this and the ziggling lines right here when they're all crisscrossing, it's hard to trade, but you still can trade it and be profitable. Okay, because here's the break you're in. You got your stop loss there and you're making profit. Now you broke right here, you broke again, you made profit up here, came back. But still, this is tough to trade, and it's a lot of times you want to stay out of it. But if you're gonna do it, keep your stop losses a little bit tight and be cautious. Okay. But what we're looking for with this kind of trading is for the big trends. This isn't really a strategy for trading the ranging market. You want to be in a trending market really for this strategy. Okay, I have a lot more that I really would like to show you about this and how to trade it, but that's just touching the basics. And you could still use a lot of different things. You could still use your trend lines. You could still use your Fibonacci retracements to get in the trades. You still have a lot of tools that you can use, but this is just like a system for you to follow, to get in and look at. So just wanted to touch on that, and hopefully this helps somebody. And until next time, God bless.